institutional investors growing curious on crypto mining but with plenty of skepticism, Analyst says. About 15% of Wall Street brokers covering the payments sector are taking Bitcoin seriously now, according to a D.A. Davidson analyst. Interest from institutional investors in Bitcoin and crypto mining stocks is growing, although most of these investors are still relatively new to the sector and have reservations about the valuation of mining stocks, Wall Street firm D.A. Davidson's analyst wrote on Monday. Analyst Christopher Brendler, who recently initiated research coverage of the crypto miners with a positive outlook, said he estimates that about 15% of the Wall Street brokers that cover the payments sector are taking Bitcoin seriously now, up from about 5% at the start of this year. While most investors are still new to this area, there were also quite a few already involved and able to dig deep into our new coverage, Brendler wrote. He noted that almost all the investors who are already involved in the sector agreed with his near-term bull case for the crypto miners, but also had plenty of skepticism, mostly around valuation. With Bitcoin's price hitting all-time highs last week and crypto mining stocks outperforming Bitcoin itself, investors have become skeptical on the valuation of the miners and where their stocks might be heading. Marathon Digital and Riot Blockchain have risen about 1,500% and 600%, respectively, over the last 12 months, while the price of Bitcoin rose 377% in the same time period. We admit traditional valuation metrics may not apply in this sector as future cash flows are exceedingly difficult to predict, Brendler added. However, it's worth noting that crypto miners are highly leveraged to Bitcoin prices as they derive most of their revenue from mining digital currencies and tend to hold as many of the minted digital coins as possible on their balance sheets. Brendler's top pick within the miners is Hut 8 Mining, HUT, whose enterprise value he estimates is trading at 4.4 times its 2022 EBITDA, a measure of the miner's profitability. Meanwhile, most of its peers are currently trading at between 6.6 times to 9.1 times 2022 EBITDA. Hive leads crypto mining stocks higher as Bitcoin hits all-time high. Shares of crypto miners continued to rally as Bitcoin moves further into record territory. Crypto miners, whose shares are most levered to Bitcoin prices, surged on Wednesday after the price of the largest cryptocurrency hit an all-time high, trading above $66,000 for the first time. Canada-based Bitcoin miner Hive Blockchain Technologies, HIVE, which mines in regions with cooler temperatures and uses low-cost renewable energy for its operations, was the best performer among mining stocks, rising more than 7%. Fellow miners Hut 8 Mining, HUT, and Riot Blockchain, RIOT, both saw their shares advance more than 3%, while Marathon Digital, MARA, climbed slightly. Stronghold Digital, SDIG, a Bitcoin miner billing itself as an environmentally beneficial operator with access to cheap power, was up more than 60% from its initial public offering, IPO, price in its debut on Wednesday. Among other crypto-related stocks, MicroStrategy, MSTR, often seen as a proxy for Bitcoin because it holds so much of the digital currency on its balance sheet, climbed 5.8%, while crypto exchange Coinbase Global, COIN, gained 2.8% and Robinhood Markets, HOOD, where many users trade crypto, fell slightly. The wider S&P 500 index and the Nasdaq Composite were also in the green on Wednesday. The share prices of crypto miners, which derive most of their revenue from mining digital currencies and tend to hold as many of the minted digital coins as possible on their balance sheets, are highly correlated with the price of Bitcoin. In fact, according to Wall Street firm D.A. Davidson analyst Christopher Brendler, mining stocks are about 70% correlated to the price of Bitcoin. Recently, Brendler initiated research coverage on Bitcoin miners with a bullish outlook for the sector and named Hut 8 his top pick. Although Hut 8 isn't yet as scaled, we see the most earnings upside in the group thanks to a brand new, low-cost 100 megawatts facility, with 35 megawatts set to come online for Q21 and the rest in 2022. Combined with well-timing mining rig orders to fill up this new data center and the cheap valuation, HUD is our top pick here, Brendler said. Miners versus Bitcoin itself. Why buy the miners when you can buy the cryptocurrency itself? Jefferies analyst Jonathan Peterson answered the question in his October 18 research report. It's a fair question, but upon exploration of the topic, we have observed that mining generally results in higher returns on multi-year periods of time, Peterson wrote. His analysis showed that if someone bought a more recent mining computer, S19 Pro, at the end of 1Q20, when the market spot price for the machine was $2,410, a mine and hold strategy would return 1,083% versus buying and holding Bitcoin, which would return 764%. On top of that, if a miner has access to cheap power, the returns are even greater, he added.